Alrighty, welcome back everyone. We're going to go ahead and kind of review Snapstock, Snapchat, and just kind of see what's going on because not only did they miss on earnings recently, now the guidance they put forward, not too long ago when they had their earnings, they're now saying that things are looking a little more gloomy than what they guided only a month ago, if it was even that. So after hours today, Snap dropped 30%, and that's basically because what they had guided before for the next quarter coming up, Q2, the CEO now says yeah, we're definitely not going to meet that. We're not going to meet that. We're not going to meet revenue expectations, anything like that. So let's just go ahead and look at some stuff on the screen here, and then we'll talk more about my thoughts on Snap and why I'm definitely not an investor, but let's go ahead and take a look. Okay, so Snap shares plunged 30% in extended trading on Monday after CEO Spiegel warned in a note to employees that the company will miss its own target for revenue and adjusted earnings in the current quarter. But if we scroll down here, we can see in April, Snap recorded first quarter earnings that missed Wall Street expectations, and that missed in terms of EPS and revenue. At the time, the company said it expected between 20 to 25% year-over-year growth in revenue, and it forecasted adjusted earnings before interest, tax, depreciation, between 0 to 50 million. We now believe it's likely we will report revenue and adjusted EBITDA below the low end of guidance. And the CEO actually points here, this statement here, we filed an 8K sharing that the current macro environment has deteriorated further and faster than we anticipated when we issued our quarterly guidance last month. As a result, while our revenue continues to grow year over year, it is growing more slowly than we expected at this time. Now, just a quick interjection here. When a company says that they're being affected on a macro environment level, they're basically trying to say that it's not just their sector that is getting hit, it's basically on a macro level, and all sectors are getting hit. But yeah, so they're not entirely wrong to say that the macro environment has deteriorated a little bit, especially certainly due to inflation, because you're seeing a lot of big retail where you sort of expected them to get hit, like Costco and Walmart and Target. They've all been hit by inflation and supply chain shortages. I mean, that's the perfect example of companies that are hit by this macro environment, which is to say everyone on a macro level is getting affected and not just particular sectors. Now, no doubt, when it comes to inflation and, now you've got to pay people more to keep your talent and to keep people working, you pay them more, that's going to affect your top line. I mean, that just is what it is. Correct me if I'm wrong, I don't really see where they get affected as badly as a retail giant like Walmart or Target or Costco when it comes to supply chain issues. I think that comparison's a little laughable. And if we take a look here real quick, the CEO did say that Apple's iPhone privacy feature that basically kind of affected Facebook a little also affected Snapchat, because remember that Snapchat's revenue is derived like Facebook's is, where it's ad revenue they make. So you place targeted ads. So here's my thoughts on them. Yeah, they're probably being affected by inflation, but they knew that for the guidance before, so I don't really know. They knew all these things, including the iOS policy change from Apple. So I'm not quite sure what could have changed in terms of their guidance, but I have my own opinion on it. And again, let me know your thoughts down below on it, but here are my thoughts. When I look at a company to invest in, you can look at the financials for Snapchat, and we're going to look at them in a sec, and you'll see them getting honestly better and better over time, including margins. But I've never looked at Snapchat that's something I want to invest in, because to be honest, even if the financials are maybe starting to look better and better and potentially make some sense, they're still not profitable, which is part of the reason why I wouldn't invest in them. But also, I personally don't believe they have a moat. And here's the thing. Financials do mean something. And again, we're going to look at them in a moment and you'll see. But at the same time, when you're investing in companies, you also have to have a little bit of foresight to see if you think the prospects of the company to you as an investor make sense. Do you believe that they can continue to grow? And I look at a company like Snapchat and I'm like, I look at them and I see a company where, mainly you're targeting a younger audience, like kids or young adults or teenagers. And remember that Snapchat, a company like Snapchat's very focused, laser focused on how much revenue per user they can generate, because like Facebook, they make money off ad revenue. That is the money they make. I look at a company like them and I don't really see the prospects that well, because targeted ads are never going to pay as much as something like Facebook, for example, because you have a younger audience, teenagers mainly, even maybe kids, and you're never going to get ad placements where you'll make as much as Facebook would off of those ad placements and targeted ads, because kids and teenagers are not likely to generate actual spending. When you have a company like Facebook, there is statistical proof showing like, hey, this targeted ad made the company that's paying for that ad space money, got the ad click, and maybe even made a sale. And when you have targeted ads on something like Snapchat, how many mature adults are actually using Snapchat? I'm certainly not. I'm not going to judge anyone who does. I'm just saying you have to admit their main audience is teenagers and kids, so your ad potential's already not high. But I feel they're going to hit a peak on how much revenue per user can be generated from ads, just due to the fact that their primary audience is kids and teenagers who aren't going to click on, they're going to watch the ad, but you're never going to get that much. The payment for that ad placement is never going to be very much, because most of those people are not going to be buying anything or click on that ad or anything like that. And my other problem with Snapchat is I just, whatever, they're growing their users fine. I don't see the moat on the company. I just don't see the moat in terms of keeping users in the long run. When Snapchat came out, I literally downloaded it and used it for like a couple months. Is like, shit, we were bored at work or something and goofing off, or like, messing around with it too with my niece. She's 6 years old, and at the time she was 4 when I had downloaded it. She's 6 now and she barely uses it now. I just you can correct me if I'm wrong, but I see the company and the service is almost I see it as a fad. I just don't see it being that strong when you have different companies, like you've got Facebook and you've got Instagram, and if that's not stealing any space from them, what certainly is, in my opinion, is TikTok. And I know they're not completely comparable and they're different, sort of services, but at the same time, that, in my opinion, has built something of a moat, even though it's faced some competition from maybe Facebook Reels or YouTube Shorts. That's built something of a moat and is taking kids' attention. And who's going to use Snapchat? But let's go ahead and take a look at some basic analytics here for their financials, and you'll see that I don't particularly have a problem with the analytics here until we look at some more specific stuff in a moment. But if you look at the revenue from even 5 years ago, it is growing. From 2017 to 2021, you have 824 million in revenue, up to 4.1 billion. So, I mean, that's good growth, especially in here. This was good growth And I really feel that the good growth happened here, especially, in my opinion. I guess that's another point I want to make in terms of their growth prospects. I feel that the good growth happened here because people were bored at home from COVID and had nothing better to do, and they just had to find something to do with their time, so they were stuck on something like Snapchat or something. But if you look at it from a financial standpoint, it doesn't look bad in terms of maybe getting better and reaching a profitability. If you look at them, their gross margins never have gotten worse. They've only gotten better. For example, even if you compare 2020 to 2021, the gross margin right here is about 52%. I just did it on my phone's calculator. And the gross margin here is about 57%. So, I mean, and they're less and less down this way, so it's increasing. Your gross margin's getting better over time. That's something you do want to see. And if you look at it here, operating income is getting better, and your net income is getting better over time, which means you're getting closer to profitability. What we don't like seeing and sort of discounts this revenue growth a little bit is the shares outstanding, while they haven't increased a bunch, they have indeed increased through time here, most likely due to stock-based compensation. But I mean, even your earnings per share has gotten better through time here. I think the big problem we face here is you're starting to see them try to claw their way to profitability, and then you see that they're saying, oh shit, revenue is going to start to slow, earnings expectations are going to slow. And the problem I see there is this is a company that needs to grow fast with their revenue and their earnings because, again, join me on the screen here once again, you're trying to claw your way, you're trying to justify paying for this company because the growth is still good and you're eventually seeing a path to profitability. And now they come out and say, uh-oh, revenue is slowing a lot. Uh-oh, our earnings aren't what we thought they were going to be guided due to macro environment, whatever. But the point is, if your growth slows too much before you can reach profitability, there was no point. Because if you just said, oh, this company, I can tell you right now this company will never reach profitability, then the company's worth zero. But if you know that there is eventually a path to profitability, then it is worth something and you can calculate that. But now that revenue growth that gets them there and that continued improvement of EPS is jeopardized by them coming out saying that. And if we go ahead and take a look at their earnings that they had just missed EPS expectations and revenue expectations on, which is why they had gone down before, we'll go ahead and just review some stuff here. This is just a basic outlook on some stuff that honestly matters here. And you've got revenue, which did grow a good amount. You've got operating loss that got better compared to last year, year over year. But net loss got considerably worse, which is part of what affected EPS expectations not meeting. And if you actually look at this cost of revenue to get their gross profit, the margin actually went up again. So gross margin went up to, for this quarter, 60%. So 60% margin. So, I mean, the margins are still technically getting better. Now, this is something I really don't like right here. So if we take a look at them, compare quarter over quarter, your quarterly average revenue per user, which is extraordinarily important for this company because this is how they make money. Their quarterly average revenue per user did go up year over year, comparing Q1 to Q1, 2.74 to $3.20 per user average. The problem is, if you look at all 3 quarters before it, it's lower than all 3 quarters. Perhaps you could make the argument that the targeted ads are better later in the year versus earlier in the year. I mean, that's about the only argument you could make. But what I'm seeing here is not year over year, but sequentially from quarter 4 to Q1 here, that quarterly average revenue per user went way down. And the reason they had a good Q4 where the stock actually had gone up is because this quarterly average revenue per user went up a considerable amount compared to this Q3. And, they had beat on revenue and everything. But now you have a quarter where they missed EPS and revenue expectations. And sequentially, your average revenue you can make off of them per user for ad revenue went considerably down sequentially. That's not something you want to see. Now, maybe I'd be proven wrong if we fast forward to Q4 here and the Q4 is better than this Q4, but I don't think I see that happening. I just don't like the company, okay? But just because you don't like a company doesn't mean you should judge it, and I'm the first one to normally say that. But you have to take all of that out of the equation and say, do I like the prospect in terms of their growth and their moat they have, and how much revenue do I believe they can continue to generate per user? And now I have proof that, sequentially it went down quite a bit. You now have the CEO coming out saying, wow, earnings are going to be definitely affected by this macro environment. Revenue is going to be affected and be on the below what our lower end guidance was not even 1 month ago. You need to have the prospect of improving this revenue per average user because that's how they make their money off ad revenue like Facebook does. And I don't personally believe that the prospect is very good for that. That's my opinion. But okay, folks, that's all I've got. Just to recap, their last earnings that they did have, they missed EPS expectation. They missed revenue expectation. The net income got worse year over year. Sequentially, the revenue that can be generated per user went down from Q4 to this Q1, which I don't like seeing. And now the company comes out, the CEO comes out and says, now our guidance for revenue and our expectations for earnings is going down. Just letting y'all know that ahead of time before we reach a next earnings. Overall, I don't like the story, and here's why. We looked at financials together and saw that they were improving over time, but that's improving over time to see a path to profitability. My problem is that if revenue slows too greatly before you can ever get close to reaching profitability, now you've reached a problem there. Now, the CEO says it's because of macro environment conditions that affect everyone, not just particular sectors. But regardless of your thoughts on that, it is happening. They have said it will affect revenue and earnings potential, which hurts the story of reaching your path to profitability, or at least in the timetable that people thought it would. And then on top of all the factual stuff I just said, then I kind of throw in my own personal viewpoint that isn't really based on numbers, but to say I don't like the prospect for this company personally. I think it's more of a fad that in the long term won't retain users. I don't think they have a very good moat, and I don't think that they have much of an audience in terms of growing, and this is the big one. This is fact, but partial opinion, and this is the big one. I don't think they have a lot of potential to grow that revenue per user because your main demographic is kids and teenagers. A company like Facebook does so well on their revenue per users and is even growing that revenue per user because, well, no offense, it's a lot of middle-aged and old fart people and whatever. You can say Facebook's dying, but it's easier to target ads and make more revenue per user on average because people are actually buying products through those ads, where in Snapchat's case, you're never going to get that revenue per user, in my opinion, very high just because of the service that it is in the demographic. So, okay, y'all, that's my opinion. Personally, it's not even something I myself would be investing in. I'm not even interested to try to run a model. You can't really run a model. That last quarter was the first one really where they had any positive free cash flow, but not enough where you can actually run an accurate model, not enough consistency. But okay, that's going to be it for this video. Let me know your thoughts down below, and I'll see y'all in the next one.